John.
Yo, yo.
Yo, what's your thoughts on Bitcoin right now, man? I know that's been kind of in the news lately.
Oh, let's take a look here. Yeah, I was looking at it earlier.
Popped a little bit.
Yeah, honestly, when I looked at Bitcoin, I see it doing something that's quite disturbing. Actually, it popped up to a level that that's like a medium bar. For me, take off some of these. So basically, like Bitcoin, it came up to hit a giant B point to an M, and you know, it effectively did that, and it left another B point here too, and it managed to get to it. Like it literally got to it. So right now it's like right in the middle of that move. Like it's not even in the middle actually. It's at the 38%. So at the end of the day, this B point's been cleared, and now I can see that it was on a channel that went up like this, and inside of that channel, it had a little bit of a medium bar, and I can see just like on the Nasdaq, it's really it really got used a lot. And we just came up to smash it from the underside. And I'm like, well, it really does put a lot of stress on this line now. I'm starting to look at like the time that it has between the current price and getting back to that level. It's still got a lot of space there, but um, what I can see that it's done right here is that it's rallied up on three consecutive highs. So managing to come back to the first of the three highs is is something that I could see it doing. And I mean that looks like 30,000 right there too, so I mean that level we could hang out at that level for a little bit. Yeah, 30,000. Yeah, we'll keep an eye on this level cuz it's the first of the three.
Yeah, in the past too, it's definitely hung out in like the 30K range for sure.
Yeah. Yeah, exactly. So like when we were here originally, like when it stopped really going up, it made this into a spike, and then that was the B point that it ended up coming back to. And when it got to that B point, like this is where it all began, and it reminded me of that Wyckoff where it has like an N, the preliminary support. Uh, it's like phase A basically. Did a little bit of phase B, but then it played out the M instead. Because I noticed that this area here, it's like the same distance as what it did down here, and it reversed like perfectly into half, like doing this movement right here. Find it interesting that it didn't manage to get to this B point all the way. It managed to get to this one. That's still open too, which is interesting.
So if you ended up grabbing it from like the yearly low, this would probably be your take profit, at least on like half of it.
Yeah,
You kind of see where it goes. Yeah.
I'd say so.
I did actually scoop a decent amount when it was in that like 15, 17 range. So I think I might unload a little bit, man.
Mm-hmm.
if it breaks that like major trend line too on the daily, it'll definitely just like dump way down to those B points you were talking about down there.
Yeah. Yeah, I'm getting ready for some movement here on the Nasdaq too. I think that, this gray zone that we made here is actually pretty significant. I'm seeing a lot of what it did here in what it's managed to do away. Managed to even do this other part here at the high. Very distance. And I'm like, that's one way that it ends up being an S wave right in the middle. But I can see continuation here. They like to pause it because anybody that's part of this big wowing move, typically through the consolidation, they piece off so much of the position that they don't have any left. But not if you're hedging though. You're not if it's not the first thing that you go to when you're in the habit of hedging, but to keep as much of the core as possible and to manage it with the hedges. That's what they're there for. So you can use more and manage more. You don't have to give up as much of the position.
It's kind of reaching the tip of the triangle here too, eh?
Yeah, yeah, it is. Yeah, everything's getting ready to. The one thing that I like about it is that it's moving. Yeah, gray zone. That's a level that's otherwise been capable of taking it out many times before. But instead, what I think that it's actually doing today is allowing for people to short into the move. And where are they going to put their stops? Not the green zone. It's all part of the plan. Because people that sell put stops into the green zone. And what's the high of this range, if not the white dash line? Why is it that we seem to not be able to buy past the white dash line, but we can buy up to it? I think it has to do with market manipulation, and I prove this day in day out. The white dash lines get treated like this, and it's quite remarkable actually, because it shows that everything is allowed to be bought back up to the white dash line, but anything past it is a little differently, and things start to change. And this isn't the one that I'm really interested in here, but this one up here. There's VWAPs up there too. I did mark the time of the previous consolidations before. See that the time is here now. Time is up. What time is it? 2:18, eh? Time. Sorry, this is not a VWAP. It's just a line. The line saying that the time is up for this consolidation. If it is any more time, then it is more than any of the other consolidations. Give or take a couple minutes, but that's about it. pretty much that time. And it likes to make an effort. This time it took a little bit longer, but it went back to the normal amount of time shortly after. It is, after all, the average time of each consolidation, and that time has come, basically, in this consolidation. And it is on top of a relatively intriguing level, one that's been used recently in an intriguing way. I can't help but notice that we tested it twice from the underside and then come up on top of it and tested it twice from the other side. It's something that's very, very common, except it's typically closer to being similar size in tests, and this time it was like totally not interested in making it same size. Just fine, survive. But here, this relationship with the VWAP is starting to kick up in volatility towards this side of the consolidation. If you look in the short term, the movements that we were having in here, it's almost like we're increasing in volatility as we continue to use this level and as we continue to break through support levels and readjust them. Because that's what we're doing, really. When we leave this area, it will not be on an angle that was as steep and threatening as the angle that brought us to the VWAP. And just remember, on the other chart, there is a range up there. Like this node that's right here, like it was more predominant. Like it has a red zone and green zone that capture these highs. The original move of the day, we can go back and understand that the spike on the bottom versus the spike on the top created an uptrend, which then took this area and doubled it down. You could say it actually doubled it from the high all the way down and then returned back to the mean. But when it did that, it effectively meant that the last thing that we have is a spike out of the top of the consolidation and a spike out of the bottom of the consolidation, only to return back to this center node yet again. If I make this a different color to make it more visible, the amount that we've been moving on either side, it's similar in the sense that it both has this extra portion on both sides. And I'm like, sure, okay, fine. It's not the same size as the middle. It's got this little bit on the top. And I'm like, sure, fine. That's acceptable. But it's a mathematical fact that we do have this portion separated as it is, as you see here, right? So I'm like, okay, we can look for this on the short term as well. At the end of the day, the entire day has been spent around this medium level here, like this area here. Everything that we've done outside of the bottom of it has been wicks and spikes that have all amounted to it going back into the middle. Everything that we've ever done out of the top of this range has effectively been capable of bringing it back to this middle area. Taking off all of this analysis, um, and just having that understanding is really quite something. At the end of the day, it's totally fine to have this as a range in this area, as it's being used as so many of so much like other ranges that we've seen. But like I mentioned earlier in the day, there was a range and it had a green dash line. We weren't breaking out to it at all, and the idea is if we don't break out to it violently, we can break out through it. I can see that the other uh, stocks here, Alphabet, is deciding to make a move out of its consolidation. Now, keeping in mind that Microsoft, it's not uh, completely made its inverse head and shoulders. I did talk about it being a little bit weird looking, and it doesn't have to be even. It totally is that way. It's strange looking because it's almost like it has a giant left shoulder and then a smaller right one. But what are the shoulders when we get into it? they're levels that don't really do any kind of movement. They're like the other than return back to where they came from, right? And the head protrudes beyond both of these areas. And in order to make those shoulders, it's like while they're forming, it's like they're consolidating because they're not really trending away from where they began. They end up where they began before a new thing starts. So effectively, while it's doing those shoulders, it's confined between a decisive area, right? And then the head leaves it. And I mean, this is a confinement area, and this is a confinement area separated by a spike between the two. Are the components not there? It becomes a question. Because it totally is. On the Nasdaq index, very similar. Left shoulder, head, right shoulder kind of deal, right? And sometimes, we get this right shoulder when it's on the retest. What a better thing to call it than a right shoulder retest? And then, you know, the continuation part. And what's ironic about this is we went 1, 2, 3, 4, and 5, which was the largest. Google, of course, is hitting its targets finally. Every single one of those targets that I put on every single one of those stocks has been hit. The other one's going to. Remember this as well. It's so interesting to me to see what it looked like before and after. Let's take a look at this here. The volume profile. Okay. Now, of course, we've got this big red zone, green zone, purple zone in there now, but what happened to this? You see in this picture that the POC was up at the 61, and look at how much volume we had here, right? This was before we chopped like crazy inside of this little area that I had there. So that little area, it's like they bought it up into that target zone, which I made that little golden triangle there because it was a very attractive target, and they stopped their buying in there. And basically, I think they allowed everyone to short it, and everyone just got stopped out. And basically, this is part of the squeeze. Now, I wouldn't be surprised if it gave them back their entry, though. But the thing is most people will still continue. Which is brutal because the green zone can relate to the red zone, of course. If there's one thing that it's known to do, if there's one thing that it can do effectively, it's that it can create the need to journey the purple zone and to use the purple zone, you know. And that's what this is right now. We're really getting involved. Every single one of the B points that has been placed since the major move down has been retraced. Every single seller that there was on the biggest move of the day bought out. Interesting. This is how it's setting up for the end of the day. And I can't help but notice, like, do we all see just this giant S wave sitting right in the middle there? Like it's like how can we miss that? The market itself is like really met its equilibrium. The 50% retracement. Now, of course, the high of the node is a juicy 61, right? Oh, take this. So be careful with that too, right? At the end of the day, what did we see on the other chart? The other chart, where is it? And disregard the small gaps, but what happened when we got through the gray bar? At the end of the day, it was the thing that is the most controversial level that effectively held us back so many times in the past. we struggled to even get this going. But you can see what really happened in this channel. You know, I'll turn it down a bit, but yeah, this channel, it literally left it, right? All the targets were clear at the moment that it was formed. It played out so swiftly to the green bar, barely, barely, barely hit it. It got so close it didn't even quite, it like grazed it. And then basically what that meant was is it was attempting to take this range and double it, right? And it got to maybe like the 178 or something. But fine. At the end of the day, um, this used to be a middle of a range too. So just remember that this morning when we were in this area, we were using ranges from weeks ago. And if there's one thing about today, there's no better spot for it to be able to go sideways than where we are right now, ironically. Now, that, what we did there, it did go sideways at a concentrated level, which was just below the green zone, just below the white dash line. And this is the 61 on the other chart, where we can see that it was of a major interest to me originally.
Hey, all right, you got there.
Yeah.
Sorry, I've been having to get up and down, working with my daughter in class today.
Oh yeah, no worries. The B point that was just formed on Alphabet could get formed. Now it's funny about Alphabet, they didn't even look like they made an inverse head and shoulders. Like where's their inverse head and shoulders? It was terrible looking. If it was one. Like here, here, and then here. What that reminds me of is how we were doing these weird looking consolidations before, like that. Whoops. And they would look like this. And we've seen that before. Like it does do that. Hey, now we've also hit the green dash line, which is the point at which it has doubled this range. Exactly. Doubled it. So it's like, what's ironic as well is anybody that struggled with the range from the moment that it suggested reversal, every single bit of selling has been bought out by this point. And I can't help but notice that they made a siege node on the green zone, and in the event that it decides to come back to it, they can add volume to that level, and people will understand why, because they've seen it constructed in front of them. And I'm like, remember that range before that, you know, would play out like this, right? And I was like, okay, ultimately I'd like to see the journey back to 15K on the Nasdaq. Any positions from yesterday still hold. It's just a matter of hedging. Um, you know, I'd like it to see it get through the green bar and so on. That that if it was to do it with this trend could mean so much more, like unrealistically more. And if you have any exposure to this move, the name of the game isn't finding out where you're going to sell it, but where you're going to hedge it. Now the red zone could lead back to the green zone. Of course, there's a red yellow line here. Coming back to do a retest of it is incredibly important. Any kind of movement that we get on top of this red yellow line is subject to coming back to it. And until it does, that is the case. And this doesn't count. So so that's the way I see it. So getting on top of it is the first condition. Actually coming back to it. This is a response to it. I don't really count that, like I said. Um, which is important. And I'm like, what about the 61 people? Do we test them again? You know, at some point in the mix, they can get a test. After all, they're just at the bottom of the red zone. where in the red zone, everything that we've ever done has always come back to test the red zone after it's left it. Now, sometimes as quickly as it's made it. So that could be a negative response to the red yellow line. Testing the inside of the red zone. It's appropriate. If you find a way in, make sure it's very safe, of course. End of the day, if you're in from a previous day and the name of the game was to capture a hedge against that position, if you've managed to do that, you don't have to figure out where it's going to go up from, and you don't have to figure out where it's going to go down from until it knocks out your hedge. But if you make it safe to hold, then that's the best position you can be in for the port. And then, like, you know how this one went up to the 188, 200, the gray zone, and then it's like we launched basically past this consolidation area as far as we spike down, or are we doing that? Because it's like, well, does that present a risk of its own? Well, it does, for sure. But the biggest risk is going to be in it breaking the uptrend. Now, the uptrend has been made clear. Ironically, we could fit the entire consolidation in there again. The more they go, the more time they buy, the easier it is to respond to levels without breaking the overall trend. Yeah, yeah. Could it be appropriate to make that as the next counter trend pullback? Well, of course it could be. Do you know what that could mean if we do this now? Is it could be a fourth wave. Doesn't have to be a dump off of it or whatnot. It can be an actual fourth wave. And I mean, if it decides to make the same confines as this, it can actually go up as well. It doesn't actually have to take the same time, but it could take half and still be a fourth wave. At the end of the day, it's just an idea. You want to make sure that play it safe regardless. Right now, I can see that there's a need to come back to this point on the alphabet, so we have to be careful with that. If the market feels that need as well, could it look like the green zone and red zone getting used? After all, why do we make such a big node on the green zone? Well, how do we make it through them? Well, we put it under siege, we throw everything we have at it. When we're left with it, we've constructed a giant node of all of those attempts, all that volume, everyone that was in there trading in there, made that node. And that node just so happens to be bigger than any other node in the area, since the day. If you look at pre-market volume, you can change it. But I'm like, where did we go up through then? And is that going to be in the way when we come back to it? It could be. We have to be careful. And I mean, it's already marked as a medium point in the range there. But that level, it's a little bit more important than it really looks like when I zoom in. Because you can see out of the entire day, look at all that volume. It just amounts to being right at that purple medium bar, right? So when I zoom in, it goes away, but it doesn't mean it's not there. Okay, so that's the main thing. They even gave us a little bit of volume on there, so it's like if the people didn't see it, if they're not zoomed out, well, at least they'll see that, right? So we all know something is there. And is it the case that we've went above it enough to make the same pullback that we did before and hit it perfectly? Curious about that. Or do we have to make a little bit of a higher high? It's 6 of one, half a dozen of the. But until we make that pullback, we may not be ready to continue. It's possible that this could be a fourth wave. After all, there's been no other move like this. And you could consider this one maybe. Like, what about this one? Very similar too, isn't it? So that's interesting. It's also similar to the size of this range down here. Like we use this distance as a comfort zone before. And is it not interesting that it chose to go sideways the most in between ranges? Like, as I mentioned before, sometimes when we go inside of a green zone and red zone, it makes the node. And we can go inside of another green zone and red zone, and it makes a node there. And what that can look like is, that was terrible, this, and then this, leaving a gap in the area that it decided not to trade in. So the next day it comes along and it notices that there's a giant gap in there, and then it does this and just builds this entire node right in the middle of the two gaps. Because right up here, we can see that there's a red zone and green zone. It could use this entire range here, and it chose to put the node in between this range and this range. So it's not uncommon, basically. And also, just as I mentioned, it could come back to test the red zone from the other side on the other chart. This is happening exactly the same way. Um, Testing the 61 from the under or from the over side as well. One major interest that I had on this chart was to actually take a medium bar across the like, what's going on here? Interested in the level. You know what I see there? I see the potential. Try and do this. This is ridiculous. I'm gonna do this, I think. Be very careful. End of the day, it's very prone to being able to make this kind of like cap wave. On the anticipation runs, we're getting close to the end of the day now, and I mean everybody's seeing the fact that it's now been bought past the middle. Anything it does past the middle can come back to it, of course, as well. So it's not very sorry, it is very risky to position yourself above the middle for long trades, as it is very risky to position yourself short below the middle. You know, at the end of the day, if one thing is so common, you know, returning back to the middle, why would we prevent it from happening, right? Or why would we position ourselves to lose money in the event that it happens? Because if there's one thing that's true about this consolidation, it moves back countless times from one side to the other. It will leave once. So it's like very, very interesting to think of. And I'm like, well, you know, it's very good statistically at moving back and forth between this range to fight it. Um, it has to be a very decisive move. And what a better time to get out of the range than for the earnings report? You know, one of these big, big moves out of the earnings report, subject to moving us more than double the size of any move of the day. You know, we could get out of this range and double it. Because what's the most common thing for it to do when we finish consolidating? Well, it doubles it at the minimum, typically. Doubles the entire consolidation. Like, think about it here, for instance. Pick a consolidation of the day and show me how it hasn't doubled when it finished. So that one doubled up there, right? And when that finished, it doubled down, right? And when this one finished, it more than doubled. I think it was about a 261. Because, you know, it doubled to get to the 200, and then maybe just a bit more than half. Maybe like looked like a 261 to me. And then effectively we went sideways here, and I mean it came from something that was more than twice its size, took that same distance, and I mean a little bit more than doubled it. At the end of the day, it's responding to the red yellow line that it otherwise couldn't break earlier. But is it not remarkable that everything yet again has been bought back up to the red dash line? Now, not in the best way, I must add, but it is a day of, um, you know, you could expect many of the players to be here, you know, watching, if not actively trading, you know, ready for any major movements that there. 61 just got tapped from the other side, and it's roughly the same kind of node and distance that we kind of constructed here. And I mean, that pullback has been shown appropriate for this trend. So long as we are within this yellow line, this is how we pull back when we pull back. Because there's been no other way other than this little small one right here that we have pulled back. And that little small one's not to be completely disregarded either. I tell you, it does actually show itself from time to time. So I mean, like, we've seen it perhaps there, a little bit smaller. But I mean, could we see it again? Yes, because it's so small, it's easy to form. The smaller it is, the more frequent it can be. More time in the day for it to happen more times. But also beware, it might not be done the fourth wave yet. Because if there's one thing that it's done today, that it's taken a remarkable similar amount of time to consolidate each time. Now, not to say it has to take this much time this time, but maybe half. If it did take that much time, it's not the end of the world either, though. It's true that it is the average time that it takes, and that's fine. But one thing that I can't help but notice is that this range and everything's been good, right? But we did make this trend, this last red yellow line. What was it doing that was so particular? Well, it had a specific spike out of the top and a specific spike out of the bottom, and I can't help but notice that's the size of our consolidation there too, and the size of our current move rate. So that's another interesting thing, but not what I was actually looking for. Oh, I just noticed that it actually happened on the green zone and on the red zone. Coincidence? Interesting. But you know, at the end of the day, we have one of these moves on the exterior of the red zone, one of these moves on the exterior of the green zone, one on the interior, and one on the interior. Very particular. And it's not the work of the public either, I don't think. So, at the end of the day, it's set up very much so to be triangular. In the event that we break this trend, it could cause a triangular like motion. So it could be rather appropriate for the imbalance, which we should mark, because at the end of the day, even on a day like today, there still is an imbalance, and I mean, people could be waiting for that to happen before they make their decisions. After all, it could be a wise decision for those that don't have the ability to day trade or anything like that, or trade into the after hours session. A lot of people will be looking to acquire their positions as close to the close as possible. So it could be, could be a volatile one on the imbalance there today. We'll see. Another major thing as well is these earnings reports are going to be the first few of many to come out over the course of the next few weeks. And they are major ones. However, there are more major ones to come. So whatever movements that we get on these reports maybe they end up right back in the middle where they actually release more major reports. Make a lot of sense.
We have like Facebook tomorrow and maybe Amazon on Thursday or something.
Sorry, what was that?
I'm saying I think we have Amazon tomorrow, yeah, and then we have or no, sorry, Facebook tomorrow, Meta, and then we got Amazon on Thursday maybe.
Now, let me find out for you exactly. Just make sure. Yeah. IBM's tomorrow too. There's a ton. coming out tomorrow. We've got Facebook at 405, IBM at 410. A few other ones like ALGN and nothing really capable of moving the market but those ones, I'd say. Like there's some other ones that could be interesting for their own movement, but that's kind of irrelevant. There's so many that get released though. I mean, there's a chance that they could have unanimous movement and it could affect the market. But Facebook could definitely move the market. IBM is capable as well. You would think, but maybe not as much as they used to be. Definitely Meta is the one for tomorrow. So undeniably, we do have a new fourth wave. And we're about to have the change of the hour in 10 minutes as well, so that could shake things up. But as I said, we might not be done the fourth wave yet. I'll be right back. All right, so Google's on its support line there, so we got to be careful with that. It's like it's got the 3 drives and it came back to the first of the 3 on the short term. And we got 5 minutes until the change of the hour as well. Could be something to end consolidation. It's pushing half the way that the other one took. And also the 261 is where the beginning of the red bar begins. The 261 fib channel level that was related to the channel that we had below. And of course the support line can be readjusted to the new support here. Just as much of a risk as the last one. Of course, on the very, very short term, you can see that there's a head and shoulders trying to play out to its neckline. It's not even visible on the 1 minute. This is a hit of the 261 for the first time. Like the official first time. And of course we've done it on a way that has left a little bit of a B point on the inside, so half the upwards candle could be taken back easily. Like I said, half the amount of time. Oh yeah, the yeah, I typed in the chat. I think I was muted, but I typed in the chat. I was like, continues to the 261 after a test of the 61. We continue. It's time to stop selling core positions and start looking into hedges that you can make for the earnings report at the end of the hour. Up with Microsoft. So intriguing. When we manage to make a consolidation here, take that consolidation and put it underneath, and then over top. We move these back. I mean, see, the distance between this area, although it's not the same as this one, and this high, is the same as what we did here. Very, very intriguing. The distances between the consolidations have a seemingly particular amount. Now, one thing that's not particular about this is the distance between these two levels. That's interesting. So the distance between this one and this one, same distance. There's two moves that it can make. Oh yeah, yeah. Sorry, sorry. I was just looking at that range, January 2022. It's a long time ago for it to use that range. Yeah, honestly, I'd like to see it in that range up there again. That's the 15,000 area. That's what it wants to be at, I think. This consolidation is in that area that we chose to consolidate for so long, created a long time ago, and it chose to be used as a barrier for being able to inch higher into it every single time. Now we've met it again after responding to it many times negatively. A big node will be formed here. Do one. The heavy duty retest reminds me of the one on Bitcoin, not gonna lie. Daily. Where it left these highs unopened. Let's see what it does with them. Sometimes it's just those highs that it comes back to get, and that's not enough for a lot of people. When it's on the daily, it can be. Ultimately, I'd like to see it get through the gray zone as well, but I am interested in edging it. See how we approach it. Get a negative response to it originally. Common. Making the imbalance at the fourth wave. Any movement that we get through the red yellow line, come back to it in a test. And it's like, what did the first 5 wave move? 1, 2, 3, 4, 5. It came back to the fourth. That's what it did. And that would mean coming back to just this. And Google, be surprised if they're doing the after having broken the trend, come down to hit every B point associated with the last consolidation, it chooses to continue. Nasdaq has an open B point there as well as the consolidate. Google's starting to look more.
Hey, John, what I noticed too is that because I didn't catch the bottom, I caught going up there, retraced the bottom down to 61. But also, the added confluence there was a 15-second. It's only actually hit 3 times on the extreme, on the 30, on the R side, and each time it's gone up for major points.
Yeah, the last one was at 1507 right there.
Yep. The other one was the spike. See the spike in the middle of the consolidation?
Yeah, the very, very lowest point on the spike, yep.
Yep. And the first one was 60%, close to 60% retracement. The very bottom, about 10, 15 points up from the bottom.
Yeah, and it would have been testing it as it was doing that, but since we went up so much, it stretched away from it, kind of thing.
Yeah, each time. I mean, each time it touched it. I mean, if you didn't get the bottom because it's off a weird fib, whatever. As soon as you notice that the 1 minute RSI is on top of the 15, and we knew it was going to go up, right? So um, then that's an entry for you, a safe entry to go long. And it actually works the other way too, going down,
With the red.
like it did this morning. Yeah, because if you look at the spike at around 12, if you look at the other highs there, say you never got the high, right, and you know it's going down, then you can still get in when the 15-second RSI is around the 70 or higher. And yeah, works both ways. So it's
Neat tool.
kind of simple. A neat tool to use because hasn't disappointed me yet, and I've been using it for quite a few weeks now.
Yeah, yeah.
Because I used to get wrecked trying to take the long
Mm-hmm.
when this thing's coming down because it just wouldn't stop at the 180. It wouldn't stop at the 261. It just kept going or whatever.
Yeah.
And then I was trying to find the fibs, right? And then I said, screw that. It's got to be an easier way. So
Yeah,
because I
I'll
know when
start
there's not
looking
an
at it.
obvious spike.
Mm-hmm.
Yeah. And yeah, ever since I changed my colors on my 15-second RSI and the Ninja Trader to the red line, which is 15-second, and then the green line, I guess, would be the 70-second. It's been much easier to read. Much
Mm-hmm.
easier.
Yeah.
Good separation. I mean,
Yeah.
if you look at the volume profile, I wouldn't recommend, taking the bottom of the 15-second when we're like, you know, up this high. But I mean, if you don't have a position, if you want one, then going long, and that's one.
Yep.
But it's really quite effective when the volume profile is you're in a lower zone, right? That yellow blue zone in the bottom,
Right.
and it's really effective that way. You got to show a lot of patience because it's happened what 1, 2, 3 times going up, so
Yep.
you just can't get in anywhere, right? You have to have defined sort of entries where you're getting in.
Yeah, it'd be interesting if you could set an alert to like
Yeah,
tell you
like
every
on the 15
time
second, yeah.
every time that the 1 minute crossed over the 70 or the 30. It's
Yeah,
just
you
like
could.
you
Yeah, yeah, you can do that on TradingView, but you can't do that on I know that you can do it on Ninja. It's a little bit more difficult, but I'm
yeah.
watching it anyways. But I mean, sometimes like that second one, that spike could happen like really quick, right? So
And B points getting hit. below the gray zone. The emphasis is now put on this support line. You have to watch out for it. It's kind of the elephant in the room if it is to make a tracement to it abnormal. 10 minutes till the imbalance.
Look at the 2 hour and the 4 hour, still pretty bullish, eh? In the hour.
Yeah, let's take a look. The
I
triangle.
got larger fibs on too, with a B point at 1046 this morning. Thinking that it'll go up to that 188,200, which is close to the 15,000.
I like 15,000 ultimately. Definitely a point where I'm interested in hedging it. The gray bar has been a controversial one. I don't want to take profit though. I want to make sure that I keep as much long as I can. Hedge with less than half. I'm not like gung ho on it. It's just a uh, protection against the imbalance, basically. And if the imbalance has any kind of downwards move, you spend your time dragging your stop into profit and taking profit on the hedge. And if it continues with a large size core, then it's fine. The ATR is not that big right now too, so sitting at a 5.97 ATR. Two minutes till imbalance. Nice to already take profit orders on any hedges so that you can secure the trade. ATR is really low, so it's important to make sure that you have orders in that can secure your trade. So there's the hedge profit. If anybody hedged it, you want to be taking some profit on any hedges if your orders didn't get filled already. At the bottom of the node, we're testing the low of the, we're testing the channel, the uptrend line. Terrible imbalance. Very curious to see Alphabet at the close. Make sure all stops are placed at a profit for the report.
Yeah. Yeah.
Oh boy. I think that dropping off of that was for the auto buys to pick up a few.
Looks like they contradicted each other pretty much. Microsoft and Google.
Yeah, Microsoft's up like 15 points. Yeah, nice.
Yeah, it's interesting because what Google seemed to have done negative, it seems to have just balanced everything out.
Yeah.
Yeah, it's hard to say.
Microsoft already announced, eh?
Yeah. It's hard to say if they're gonna make any more moves.
Visa's up too, like 2%. Same with Microsoft. They're up 5.
Interesting. You can see on the market it's made a little bit of a B point there, but it is really slow now. So see if it manages to care about it. Like it. ATR certainly jumped up. Like it's grabbing that B point there. Well, anyways, it wasn't too good at all, really. I mean, they didn't go around a whole lot at all.
Yeah, they just kind of offset each other.
Yeah. All right. Well, with that being said, hopefully you guys had a wonderful day, and I'll catch you guys later.
Sounds good, John. Appreciate it.
Yeah, anytime. Have a good one.
Take care, guys.
Take it easy.